Why trade gold? Do you also trade gold? Why do you trade it? How has been your experience? Leave your comments in the comments section below. By the way, if you are looking for a reliable broker with very low deposit requirements and quick withdrawals, see the links in the description box below. Trading gold has long been a favored strategy for investors due to its unique characteristics and historical significance. Gold is one of the most valuable and widely traded commodities, offering several advantages to traders. One of its most prominent roles is as a safe haven asset. In times of economic uncertainty, political instability, or market volatility, gold tends to maintain or increase its value. When traditional assets like stocks and bonds face downturns, investors often turn to gold as a store of value. This historical role as a hedge against crises makes gold a reliable option for traders looking to protect their wealth during turbulent times. Another key reason to trade gold is its effectiveness as a hedge against inflation. During periods of rising prices and declining purchasing power, gold tends to appreciate in value. This characteristic makes it an attractive asset during periods of monetary expansion or economic uncertainty, helping traders preserve their wealth as inflation erodes the value of fiat currencies. Gold's role in protecting purchasing power during inflationary periods has made it a staple in many portfolios. Gold's global demand also makes it a valuable asset for trading. It has intrinsic value and is in demand worldwide, not only for investment purposes, but also in industries such as jewelry, technology, and central bank reserves. This widespread demand ensures that gold remains a liquid asset with a robust market across various regions. Traders can capitalize on opportunities driven by shifts in global supply and demand for gold, creating numerous trading opportunities. Diversification is another reason to trade gold. As a non-correlated asset, gold's price movements do not always align with traditional financial markets, such as stocks or bonds. This makes gold an excellent tool for diversification within a trading portfolio, helping reduce overall risk and potentially improving returns. By including gold, traders can spread their exposure across different asset classes, mitigating the impact of market downturns or currency devaluation. The gold market is highly liquid, offering a range of trading options, including physical bullion, futures contracts, and exchange-traded funds, ETFs. This liquidity ensures that traders can enter and exit positions with ease, even in large volumes. Gold's accessibility appeals to both retail and institutional traders, regardless of their trading strategies or risk tolerance. Additionally, gold's price can be influenced by various factors, including economic data, interest rate policies, and geopolitical events, leading to volatility in the market. Traders can exploit this volatility for profit, whether through short-term trading strategies like day trading or long-term trend trading approaches. Gold also serves as a hedge against currency fluctuations, particularly during periods of weakening fiat currencies. When major currencies, such as the US dollar, decline in value due to inflation or monetary policy changes, gold prices often rise. Traders anticipating currency devaluation or weakening economic conditions can trade gold to protect their wealth from currency risks. Moreover, geopolitical events, such as wars, trade tensions, or political instability, often drive up the demand for gold as a safe store of value. Traders who monitor global events can capitalize on price movements by trading gold during periods of geopolitical uncertainty. Central bank policies also significantly influence the gold market. Central banks hold large reserves of gold, and their decisions, such as interest rate changes or gold reserve adjustments, can impact gold prices. Traders who follow central bank activities and monetary policies can use this information to make informed trading decisions. In summary, trading gold offers numerous benefits, making it a key asset in many traders' portfolios. Its role as a safe haven asset, hedge against inflation, and protection against currency devaluation, combined with its global demand and liquidity, makes gold an attractive commodity to trade. The volatility in the gold market provides ample opportunities for both short-term and long-term traders, while its non-correlation with traditional assets makes it a valuable tool for portfolio diversification. By trading gold, investors can navigate economic uncertainty, geopolitical events, and shifts in global financial markets with confidence.